Broker Daily Uncut.
Broker Daily Uncut.
News, views and opinion about what's shaping Australia's mortgage and finance industry.
Welcome back. Thanks for tuning in. Alex, Costa with you this morning. Guys, how are we going?
Great, thank you. Excited
Doing well.
about
Let's not talk about the cricket, please, before we get started.
Oh, we can talk about the cricket.
Well, I can't. Do you know what? Even though painful though it was for a POM, it was a fascinating test match. And I have to say I really enjoyed it.
It was better than the first one.
Yeah.
At least it went for 4 days instead of the 2.
That's correct. But it's still, they'd still been enjoyable to watch. Certainly, as I think Australia played incredibly well and
really well.
bat and bowled exceptionally well, considering that 2 of their first-class bowlers are out. So well done, Australia. England, pull your socks up. Looking at the property market, I notice that with every week that goes by, the clearance rates cool. You've got to say that a lot of this has got to come down to the sort of the disappearing likelihood of any kind of easing. Yeah. It's I won't run through the clearances, but I noticed that they sort of drifted down well below 70%. You just get that sense that now it's getting a bit tighter and a bit tougher to move property if you're a real estate agent.
Some of the year as well, I think.
It's getting that time of year, you don't really want to have your property unsold by this time of the year. There's always properties that are going to be on the market.
Yep.
A great buying time if you're buying.
Yeah, but I think people also put that on a back burner until next year. And I think with what we see, that the lenders are so busy that it's also, if someone were going to buy a property today, it's unlikely they would meet their finance date and settlement date if it was all going to happen.
Yeah.
Quickly. I think people know that.
Yeah. Well, at the moment, unless if it's a purchase, the blowout times are just astronomical at the moment. I know Eva's had a lot of experience with a lot of her clients trying to get deals through, but they're just blowing out because they're busy, understaffed, and just can't keep up with the demand. Yeah.
Just came through, but it took a while.
I'm buying. It's a good time to buy. I wouldn't want to be selling this time of year,
Definitely
particularly in the markets where I'm looking to buy. I'm looking to buy Melbourne, and I'm specifically units because no one wants them. But the yields are good if you sift through. So yes, a good time to buy if you're ready.
Yep.
Yeah.
Or an investor probably. Otherwise, you'd be stressing.
Yeah.
Well, you don't want your property on the market. Once you hit Christmas, you're sort of like looking at around early February where the market picks up again. So there's like almost a month and a half going on to 2 months that your property's just going to be sitting there dormant doing nothing. And you prefer that cash in your pocket.
Well, also if you're selling investment property, and I noticed that I saw a stat from Broker Pulse that 41% of all loans are now investor loans.
Yep.
So let's say you've got investors. It's pretty sad. You've got investors who bought in Melbourne, some of them off the plan, who bought 10, 12, 14 years ago. Their property's gone down in value, and that's very hard. So you've got people who I look at it now as a buyer and I go, God, this is a great time to buy. I talk to the agents, talk to the property managers who are saying they're begging their owners not to sell. The yields are high, but they're just fatigued, so they want to get out.
Well, if you track the negatively get property for 14 years.
Yeah. And so what they're doing, some of the investors, they're kicking out the tenants because they're desperate because there's not enough investors buying.
Right.
So they're moving the tenants out to try and appeal to the owner-occupier market. So now on top of having not seen any growth, you're now wearing the mortgage costs. So it's pretty desperate, but hey, good time for buyers.
That's it.
Well, that's where the investors will come in, start seeing that there's potential there and start swooping in. And then you look at it in a year or two's time and you'll be like, lucky I bought.
I'm buying my first, as you will be well aware, Eva, but my first purchase in my SMSF in Melbourne, because Melbourne, I'm loving Melbourne at the moment. And, thanks to Beck's got that organised. Granite are going to be the lender. So excited to work with Granite. Known Bridget and Craig for many, many years. So I'm looking forward to being a customer.
Yeah, it'd be good. We had some delays as well with Granite, like everywhere.
I think they're just thorough, though. I think they're...
Yeah, it just takes time they've got so many files on the desk, I think. Yeah. They're a bit victim of their success with their product, their rates, everything they do. Just too many.
Well, they're probably the head of the market when it comes to SMSF. They definitely have the best rates. They also are the only ones that have an offset account. Yeah. So that's bringing a lot of customers to them. And like you said, they're being very successful and they just haven't probably planned for that in regards to credit people.
Are you seeing much interest from customers in investing into SMSF? It's only just occurred to me, like I've watched my shares go down and rocket up, and I've seen them now come back down. I'm sick and tired of seeing the...
it's huge. The demand is
I just want the surety.
For SMSF,
Yeah. Are you seeing more buyers looking to buy property in their SMSF
Yeah,
now?
we do constantly.
Yeah, good.
Yeah.
Anyway, that's enough. That's enough about me and my buying.
Is it like 1 in 5 buying through SMSF?
Yeah, I think it was... I think it was 1 in 5 properties that are purchased are via an SMSF at the moment. Wow. And I actually did a podcast with Phil probably about a month ago in regards to
I've got
SMSF.
a question for you. So I saw some stats saying that 41% of loans are now investor loans. Does that include SMSF?
Would.
I would imagine so.
So that's interesting. So there's maybe something to look at there rather than just a clear cut. I think it's worth delineating between.
Yep.
Because if 1 in 5 are SMSF,
that 41% would be what? 10% SMSF. Yeah.
Interesting. Look, I'd like to have a look. The great thing about now having the cadence of this podcast is you've got a lot of insight that I don't get to see. So I think after the break, we'll get into some of the things that are happening with lenders. It's really good to get, look, I'm sure there's a lot of things going to resonate with people tuning in. But I think it's, we're an interesting time of year. You guys, is the workload high for you guys? What's most of the, what's on your desk mainly now?
It's a lot of people on my desk anyway that had pre-approval earlier this year, and I just need to buy something before the end of the year. Yeah. So a lot of clients just getting.
So they're looking to, when you say they're looking to, they want to get something nailed down.
Yeah, they just bought like a few weeks ago, and then they want to, obviously on the finance due date and on settlement due date just before Christmas. And I think that's the issue with a lot of the banks, and that's what everything has blown out. It's just everybody has the same type of mentality of, I just need something before the end of the year. And buyer's agent as well, just I need to get it done now, otherwise it's next year. So a lot happened at the same time, like this 3rd or 4th week of November, that's when you get like a contract every 10 minutes.
I had a really interesting conversation with my property manager. So I don't use a buyer's agent. I do use a buyer's agent, but at the moment, the last few properties I bought myself, and I've kind of worked out a formula for doing that. Anyway, I had a interesting conversation, and also with my other hat, running REB, and also having we also run a property management platform called Managed. So we're very engaged with property managers. I had a really interesting conversation with a property manager around buyer's agents, and this is something that had never occurred to me. So the PM said they get real pressure from buyer's agents, because obviously, when they start to do, when they pinpoint a property and they go, oh well, here's the, we've secured it off market and here's all the details, and they put PMs. They obviously go to a PM to get them to manage it post purchase. They're pressuring PMs to give inflated rental yields.
Oh yeah, I'm not surprised.
So that's.
But what's happening when they can't produce?
Well, this is the thing. So the PM said, they're getting pressurised by BAs. I'm not saying every single buyer's agent out there. So they're putting real pressure to go, well, we need an appraisal of, $580 a week. And the property manager's going, I can't get that.
Yeah, no, it doesn't
so then you end up
surprise
with, when you present the case to the lender, you go, well, here's the purchase price, here's the rental appraisal.
But also here's the valuation that doesn't match the appraisal. So we see that often actually.
Yeah.
Whether it's on purpose that something has been inflated or not, I don't know.
I'm not going to mention any names, but the property manager, I say property manager, this is actually somebody who runs a significant operation, and I know very well. And it was just, I was stunned. Anyway, there you go.
But you can do your own research as well. Just simply logging on to realestate.com. You can sort of see what the market is doing.
What, in rental?
In rental.
No, you can't.
Yeah.
No.
Yeah.
Oh, what is? But they're advertised rates. You don't know what so there's a difference between.
No, you can see an average for the suburb depending on the type of bedrooms.
But people just don't do it though. Like we're talking about, like you guys.
I guess if you're getting a buyer's agent, you don't really want to do it.
No, why would you be doing that? Because the proposition of a buyer's agent is, hey, I'll go and do it all for you.
Yeah, you don't have to think.
And you want to believe what you're told, right?
100%.
I've got this brilliant buy with this huge yield. I want to believe it, and that's what. So, I think there are investors that go out and do their homework. Go and have a look at. You've got estimated rental yields which are inaccurate because they're based on historicals. You've got you're quite right. I go and try and look at properties that are in that area, but even then they don't tell a story because the place I'm buying might be facing. There was one I was looking at that was facing a graveyard. So. Yep. There's I can look at one bedders or two bedders, and this one's going to go for 670, but the one I've got might go for 540.
Yeah.
Yep.
Anyway, we'll take a break there. Back in a couple of minutes. Let's have a look at what's happening with the lenders. Welcome back, Costa, Alex, with you, guys. Using you to my full advantage is very, very good to get an insight into what's happening at the coalface. I know that we talked last week about. New government incentives and Costa, you sort of had some opinions on that. What's happening?
Yeah, so the Help to Buy has officially taken place.
So tell me exactly what that means by officially taken place. What does it mean for buyers and for brokers?
So what it is, the government will be buying a share of your property with you up to 30 or 40%. Now, that's right. They'll contribute up to 30% of the price for an existing home.
Yeah.
And up to 40% of the price for new builds.
Yep.
Now, the key takeaways from the scheme, income caps, $100,000 for a single and $160,000 for joint applicants. And caps are reassessed every 5 years, so that can go up, potentially go down once it's reviewed. Also, if a participant income increases above the cap for 2 consecutive years, they will be required to buy back at least part of the government share.
Yeah.
So say for a couple, 160,000, if that goes up to 180 for 2 consecutive years, you'll be required to pay back the government a certain percentage of their share.
So this is aimed to help buyers that aren't able to get into the market.
Correct.
Yeah.
Yep.
Has this started?
It started last Friday, the 5th of December. And there's 2 banks that are doing it. The most well-known being Commonwealth Bank, who are not allowing mortgage brokers to write any of these loans.
And have they given a reason why? Is there any sort of reason?
I just think they just want the market, just going direct to them. Obviously, they make more money out of that. And they just want to sort of have that share of the market.
I suppose it's probably a very linear. If they're the only bank that's offering it, why do you need a broker?
Bank of Australia are also offering it.
Okay.
Obviously not as high profile as CBA because all the media talk is everything about CBA. So people are forgetting that Bank of Australia are actually providing it, but they're going through mortgage brokers to write those loans.
Okay.
Yeah.
Interesting to see what the sort of thing.
Yeah, and there'll be more lenders coming on early next year. Which ones, I'm not sure. And if they are to go through mortgage brokers, that's...
you know what, I don't know if Broker Pulse the version Consumer Pulse gives data. It'd be really interesting to know what percentage of broker customers are first-time buyers, what the makeup of sort of inbound rather than sort of, whether it's referrals or whatever, because CBA is obviously a significant, every buyer in Australia, first-time buyer would know certainly who Commonwealth Bank is. They may not necessarily know, sort of what a broker does or how they operate. So it'd be really interesting to see what sort of percentage of, inquiries come through first-time buyers, how many are sort of experienced buyers, and obviously with you guys, investors is your particular...
Yeah, that's how.
Yeah.
Also, to add to that, it's not available yet in Western Australia or Tasmania.
Okay.
It still hasn't passed legislation there.
Yeah.
So everywhere else, it's in play. Western Australia, Tasmania, not yet. But they'll follow pretty soon.
Interesting. Do you guys get many inquiries? I know you deal with investors, and this is going to be...
like first-home buyers. And I guess that's like targeted at people that would be struggling otherwise.
Yeah. And they're probably going to have... A lot of people are going to be going to do their transactional banking with CBA anyway.
Yeah.
So it's pretty clear.
Yeah.
I don't know what percentage of the market they've got that bank with CBA.
And just to add to what Eva just said, there are price caps.
Yeah.
In Sydney, it's 1.3 million. In Melbourne, 950,000. Brisbane, Canberra, and ACT, 1 million. And Adelaide is 900,000.
Yeah.
So you can't go over those.
I found that very
900 grand.
very,
900 grand's a lot of money.
Yeah, and think
Well, in
about
Adelaide
it,
it is.
how is
Yeah.
two people on 160K a year going to afford a property for 1.3?
Why are you buying that?
No, but
now?
that's just not going to work. How they?
Well, that's why the government's going
to.
to own 30% of that. So
Yeah.
technically, it's
It would be
it's-
very, very tight in terms. It would be interesting to actually put that into borrowing capacity.
Yeah.
If a couple on 160K has 3 kids, a credit card, a car loan, I don't know if that would work.
Well, I'm curious to see how many people take it up.
Yeah, as well.
We covered this before. Phil's, sort of voiced this. Why? Maybe it's a generational thing, But when I was in that area where you're looking at, you bought like what you could afford to buy, and you put up with a property as a first-time buyer that was what was available in the market. Anything.
No, something like that.
And
we're entitled now, which is all the best.
Yeah, I think the thinking's very, very different. Like, I think a lot of people are thinking lifestyle now.
I know,
Where
but-
it's like, I want to be close to the beach. I want to go to the beach all the time.
but
So I
you-
want to live there.
And I know from, we sold a property in our portfolio, 2-bedroom apartment in Mount Druitt, for 300 grand or something like that. It was, we bought it, I think, for sort of around about 150-ish, and we'd renovated and it went for 300 grand. 300 grand's affordable. There's a 2-bedroom apartment. If you're looking at dual income, like there's, even if you're on a very modest income, that should be within your grasp.
Was that
definitely.
recently? 300,000.
Sorry?
Was that recent?
Yeah.
Oh right, yeah.
Yeah,
It's very
recently.
affordable. Yeah.
Yeah. And then if you look in other markets, so there is affordable property available, but there's a mindset. I mean, like 900,000. What do you get for 900 grand in Adelaide?
Yeah.
If you can buy a 2-bedroom, apartment in
apartments,
Mount Druitt for 300 grand odd.
Yeah.
But yeah, no, I'm like probably, single dwelling. I'm not sure much.
Yeah,
I don't know.
I bought a 4-bedroom house in last year as an investment in sort of the sort of up northern suburbs of Melbourne for, just over 600 grand.
Well, 1.3
New
in
property.
Sydney, you're looking at the outskirts.
Yeah, totally.
Let's be honest, anything within 20 kilometres of the CBD is well above $1.3 million.
Yeah, you are. I mean, I suppose it depends on what
Again, we're not talking about...
It depends on what you are as a first-time buyer. Are you a first-time buyer with a family of 4 and it's your first time you purchase? Obviously, you're not going to be in a 2-bedroom apartment in Mount Druitt with that type
I'm talking
of...
about houses here, not so much units.
Yeah.
But there's not much available within 20 kilometres.
And it'd be really interesting to get some data on what, actually the first-time buyer looks like. Is it, a couple? Is it a single person? Is it a family with children? So that would be really interesting to actually, we sort of talk about, sort of the first-time buyer market and help to buy programs and so forth. But who is it that they're catering for? And sort of what are their requirements in terms of real estate?
Yeah, it'll be interesting. Well, I've just written it down as a note because I'm going to look into that and I'll bring it next week.
We'd find out.
Because I'd be interested to find that out as well.
So what are the news is there around? What are the main things that you're seeing with lenders, in your, sort of day-to-day business?
The trust, I want to say the trust drama because there's been so much drama around.
It is a drama. And here's the thing, you've already got a lot of people that have that structure. It's not it's not like switching something off. If you've already built a trust structure, there are I don't know how many.
And it's still fun. It's not like it's. But again, this week, another 2 lenders, St. George, Westpac, are saying no.
So it's the banks. The banks are out.
Yeah.
Are there any banks still in?
Well, we've got NZNAB out of the big 4, 5.
Are they really in though? Because I try to buy. I try to buy with NAB, and NAB.
They're in, but that's the issue. Like you always say yes, but then they, if they're not comfortable, it's a no anyway. But technically, they are in. NZ is in as well, and then you've got the second and third tier lender.
And they've got good reason. And they've got good reason for being out of it. Let's be really clear.
Well, yes and no, because they could also just have a bit of a better checks on those trusts if
But there's a lot of, there are a lot of concerns about some of the activities of
that's right.
buyers'
But it would be
agents.
easy to say for them, provide you the financials and then judge based on that.
Mm-hmm. So, but the non-banks still...
that's fine. So we'll see what happens. I think next year, and they might pick up a larger, portion of the market for investors, especially. And then, it might just be a matter of, there is a loading on the interest rates when they come back, or just more checks about, what is the trust actually doing? What are the assets in the trust? And is it actually positively geared or not? That's fine, I think.
Yeah.
More checks, it's always good.
Yeah, I think if they put a bit more effort into it in regards to just like actually assessing what's in the trust, what the property's doing, do you need to exit that segment of the market? Again, I don't know. I'm not in the meetings with the CEOs and everything, directors, so I don't know. I reckon there's probably more to it, I would imagine.
I think it's APRA is coming, so
Sorry?
APRA is coming to check all this, so they're out before they get in trouble.
Probably makes sense.
Yeah.
Look, take a quick break there, guys. We'll be back in just a moment. Welcome back. Costa, Alex with you, Broker Daily Uncut. I think we'll stick with lenders. Seems to be
it's not there.
Plenty going on at the moment. I'd say lenders, lending.
Policies
and under
updates.
the umbrella of, you've got, sort of influence from APRA. We've also got the shifting, sort of perspective about where rates are going to go. And I sort of read something over the weekend that ANZ's now, there's going to be no change, and they're seeing things staying where they're at.
We've seen many banks actually rising their fixed rates.
We talked about that over the last week or so.
few weeks as well. So it's.
So I guess looking ahead, we've got the tail end of this year, but it's always difficult looking where to place your borrower. One lender's in, and the next lender, and then another one's moving out, and you've got to be sort of aware of appetite, policy, and so forth. What's the main things you're seeing at the moment?
Last week we had two, I guess. Not the big four, but two lenders actually having a bit of a opposite direction with their business. Bankwest saying, well, we're not going to do any more self-employed new loan above 80% LVR. Our book, too much. We've got too many of them. And then we've got ING actually opening up the door saying, well, we will take 1 year tax return now. When historically ING is wasn't really the bank you would send your self-employed. They're very
That's interesting.
strict. So completely two different.
Yeah.
So it's interesting to see where business is going and what banks are thinking, because that was unexpected for me.
It's also interesting as well if a lender suddenly decides they're going to open up to a new area. I wonder how quick they will be in assessing, because if you've been doing it for years, you'd imagine there's going to be a system there. Look, maybe when we catch up, have you put anything? Have you guys put anything to ING yet?
No, so that just happened.
Okay.
Yeah, last Friday, I think. Yes. So it wouldn't really change anything in the sense that, instead of providing 2 years tax return, we just send them one. I guess there's old habits sometimes where you'll have assessors pushing back, hey, I want to see last year's, and that does happen. But in terms of process, that should be easy to easy change. But it's a good one, because ING wasn't great for self-employed.
Yeah, well, Bankwest said they're trying to bring in more PAYG customers. From hearing that, you're pretty much just trying to get from that. They probably want to balance out their book. They've probably got too many self-employeds going on. It's a bit too risky over there. Yeah. Let's bring in some PAYGs that will, traditionally have more of a safer.
What levers are they pulling to get the PAYGs in? In terms of like policy or price, or what is it they're putting on the table?
There's nothing really specific that I could say.
They're not pulling in, they're more stopping.
I was going to say that.
It's more brakes rather than accelerator.
Self-employed, let's put the brakes on there.
To note as well, so Bankwest doesn't do trust lending, but they're very, very lenient of whoever will apply to them and have trust on the side, but not applying through trust. They ignore everything else.
So if you got it elsewhere,
they don't even ask for a letter from the accountant. So they may have had a lot of riskier self-employed business at 90%.
Yeah, they've probably got a riskier book.
Yeah.
And they want to balance it out.
Yeah.
Because again, the RBA meeting tomorrow, don't think interest rates most likely will not be going up, and I can't foresee them going up anytime soon. So they're probably preparing for that.
You'd be bold, verging on the reckless to put rates up before Christmas. It's going to kill things dead.
Never know.
Is inflation really at a stage where there's really going to be a call just before Christmas when people, look, you've got to really want to stop spending to put rates up. But clearly, rates aren't going to go down.
No. I was reading today, I think it was like 95% of people saying that it's going to be on hold.
Yeah.
And for the foreseeable future, I'd probably say for the next 6 months, we're pretty much in the same boat.
Seems to be what's the general thinking is.
And all the banks are saying the same now. They've revised what their outlook for 26, and it's basically saying nothing till mid next year. So it'll be interesting to see what inflation figures do and job employment when those figures come out early next year. But until then, handbrakes up.
I'm okay with that. If you go, nothing's really going to change much in 6 months. It's, BAU stuff. It's when you don't know. Look,
it's changing
things
so
can change.
Yeah.
Change can appear.
Yeah, of course.
But I think in general it's pretty flat.
And I think people are probably in agreement with them as well because the data isn't looking good to support an interest rate reduction. So there's no one in the background going, it should be going down like previous months in like mid to early this year when they were saying they should be going down. I don't think anyone's saying that it should be because the data's just not there to support it.
We should keep our eye on it. Guys, great catching up. Love my Monday mornings. It's good to catch up with you guys.
That's right. Thank you.
For everyone else, thanks for tuning in. I hope you enjoyed the podcast. Do please feel free to give us feedback. Contact Eva or Costa. You can reach them at Finni if you want to give them some feedback on what you'd like to see covered, or you can reach us at Broker Daily. Thanks for tuning in.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.